Financial statements are something most of us hear about in school or college, but very few people truly understand them. We memorize definitions, formulas, and formats just to pass exams. But after school, when real money, real businesses, and real investments are involved, we realize something shocking. We were never taught how financial statements actually work in real life. Today, I'm going to explain financial statements in a simple, practical way. And more importantly, I'll share what they never teach you in school. Let's start with a simple question. Why do financial statements even exist? The real purpose of financial statements is not to impress investors or satisfy accountants. Their purpose is to tell a story. The financial story of a business. If you know how to read that story correctly, you can avoid bad investments, run a healthier business, and make smarter financial decisions. In school, we are taught that there are three main financial statements: the income statement, the balance sheet, and the cash flow statement. We learn their definitions, formats, and a few basic ratios. But what we are not taught is how these three statements are deeply connected and how they reveal the reality behind the numbers. Let's talk about the income statement first. In school, we learn that the income statement shows revenue, expenses, and profit. If profit is positive and increasing, we are told that the business is doing well. But in real life, profit alone means nothing. What they don't teach you is that profit is an accounting opinion, not cash. Profit can be influenced by assumptions, accounting policies, depreciation methods, and credit sales. A company can look very profitable on the income statement and still be struggling to survive. This is why blindly trusting profit numbers is one of the biggest financial mistakes people make. Next comes the balance sheet. In school, we memorize that assets equal liabilities plus equity. We learn definitions of current assets, fixed assets, loans, and capital. But what they don't teach you is how to read the balance sheet like a warning system. In real life, the balance sheet tells you how risky a business really is. Too much debt compared to equity means high financial risk. Too many receivables may mean customers are not paying on time. Low cash balances can signal future trouble, even if profits look good. The balance sheet is not just a list of numbers. It is a snapshot of the company's financial strength and weaknesses at a specific point in time. Now let's talk about the most ignored and most powerful statement, the cash flow statement. In school, this statement is often treated as boring and complicated. Many students barely understand it, and some teachers skip its importance altogether. But in the real world, this statement can tell you whether a business will survive or fail. The cash flow statement shows actual movement of cash, not profit, not assumptions, not estimates, just real money coming in and going out. What they don't teach you is this simple truth. Cash is more important than profit. A company can survive without profit for some time, but it cannot survive without cash. Salaries, rent, loan payments, and bills all require real money. This is why many profitable companies fail, because they run out of cash. The most important part of the cash flow statement is cash flow from operating activities. This shows whether the company's core business is generating cash. If this number is negative for a long time, it is a major red flag, no matter how good the profit looks. Another thing schools don't teach is that financial statements should never be read separately. The real power comes from reading all three statements together. For example, if profit is increasing on the income statement, but cash from operations is decreasing on the cash flow statement, something is wrong. If revenue is growing, but receivables are also growing rapidly on the balance sheet, it may mean the company is selling on credit and struggling to collect cash. These connections are never explained properly in classrooms, but they matter a lot in real life. Schools also don't teach you that financial statements can be manipulated legally. Companies can delay expenses, recognize revenue early, or use accounting policies to make numbers look better. This doesn't always mean fraud, but it does mean you need to be skeptical. This is why smart investors don't just look at 1 year of financial statements. They analyze trends over multiple years. They look for consistency, not just big numbers. Another important lesson missing from school education is that financial statements are decision-making tools, not academic subjects. They help you decide whether to invest, lend money, expand a business, or cut costs. If you are a business owner, financial statements help you understand where money is coming from and where it is leaking. If you are an investor, They help you avoid hype and focus on reality. If you are a student, understanding them properly can give you a huge advantage in your career. What schools also fail to teach is that you don't need to be a finance expert to understand financial statements. You just need to ask the right questions. Is the business generating cash? Is debt under control? Are profits supported by real money? Are assets being used efficiently? Once you start asking these questions, financial statements stop being boring and start becoming powerful. So the next time you look at a company's financial statements, don't look at them like exam notes. Look at them like a story. A story about how the business earns money, how it spends money, how it manages risk, and whether it can survive in the long run. This is what they don't teach you in school. If this video helped you understand financial statements in a practical way, make sure to like this video and subscribe to the channel for more real-world finance and business content. And comment below what topic you want me to explain next. Investing, business analyses, or personal finance. Thanks for watching, and I'll see you in the next video.